Time now for an in-depth look at the market news this afternoon, and for that, I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for making time.
Thank you very much for having me.
So anticipation continues to build for this trade deal between the U.S. and China. The Trump administration's pushed back its ban on companies doing business with Huawei for another 90 days. Wall Street slightly higher yesterday. What's the story there and in the markets today?
Yes, as you said, the Department of Commerce of the U.S. has again extended the temporary general license allowing the American companies to sell to Huawei, which is the Chinese tech giant, particularly a leader in the 5G area. This announcement is fairly good news for Huawei as well as for American tech companies who relies on Huawei as the key customer. And basically, if you look at the Huawei's equipment, it is very inexpensive relative to U.S. makers. So that is very important for the overall tech industry. But the department also have said that it will continue to rigorously monitor sensitive technology export to ensure that the innovations are not harnessed by those who threaten the national security. That's what the Secretary Wilbur Ross said in a statement on Monday. But in any case, it seems that the process seems to be moving in a positive direction. So therefore, we think that the equity market should be doing okay accordingly. If you look at the Dow and S&P and NASDAQ, because of the some of the technical corrections, the indices really didn't move much. But for the Asian market, other than Japan down by 0.5%, Chinese equity market was up strongly by 0.85% for Shanghai, and Shenzhen is actually up by 1.8%.
Right. Well, of course, shares in New York do keep climbing higher and higher. But what's the situation here in Korea? Obviously, a lot more concern locally.
Well, I mean, I think that everybody's looking at what's happening to the foreign investors' direction for Korea. And foreign investors been a major net seller since the 7th of this month to the 18th of this month. And the total net selling amounted by about 1 trillion won. So foreign investors were selling because the Korean won appreciation was too fast. We think that appreciation was a little bit over-exceeded. And because of that, the foreign investors' net buying are not really coming through. And the key question mark is that the index changes, the MSCI index changes, that affects negatively for Korea versus it affects positively to China. So the foreign investors are selling of Korea and buying of China, which seems to be putting pressures to the equity market. And also, if you look at the economic growth rate, it comes out that Korea have slowed down much more significant than any other countries in Asia. And we're actually looking at below 2% growth rate. At the beginning of the year, we're looking at close to 3%, 2.7% growth rate has come down quite significantly. So having said that, people have some doubts on fundamental long-term picture for Korea, as well as foreign investors selling out of Korea and buying China on back of the MSCI index changes.
Well, speaking of fundamentals, next year's government budget in Korea, more than 500 trillion won, the so-called super budget. It's gotten even bigger, slightly, as it's reviewed in Parliament, adding about 10 trillion won. Now, some say this will strain the state's finances. Others say it won't. Briefly, what's your view?
My view is that it won't put any dent to the overall fundamentals of the government budget, government balance sheets. If you look at the government debt level, it is only at 40% of GDP. Even you include all the regional debt, it comes in at probably less than 70% of GDP. So we do need a very strong budget in order to boost the economy. We definitely need fiscal stimulus in addition to the monetary stimulus that we've been seeing from the rate cut twice this year. The people have, however, the doubts about where the monies are spent and does it have any long-term plan. That is a question mark. Given the fact that we are in an era where we are competing on the fourth industrial revolution industries, and global competitiveness is most important in order for Korea to succeed in terms of achieving above 2% growth rate. So yes, the budget is needed. The question mark is where is it spent.
Got it. All right, Mr. Yu, that's where we'll have to wrap it up today. Thanks so much for coming on.
Thank you very much.